The good narrative or model is Bitcoin is digital property. The bad model is Bitcoin is digital gold. The ugly model is Bitcoin is digital currency. And it all comes down to the word, and you won't get past the word before someone comes right back over the top and tells you what they think.
Wait a minute, everyone. Welcome to BitcoinZella, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. BitcoinZella offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with BitcoinZella. Subscribe now. In today's video, Michael Saylor discusses everything happening in the rapidly changing and still nascent Bitcoin ecosystem. Saylor also explains the difference between Bitcoin, gold, and the meaning of money. So without wasting any time, let's dive into the video.
If someone says, if I say to you, well, do you like Bitcoin? And you think, oh, Bitcoin, the digital currency? Well, then you might very well answer like, a certain politician answered a few years ago, like, no, I like the dollar better. Okay, because you thought that Bitcoin was competing with the dollar, and you thought someone was asking you whether we're going to replace the dollar with Bitcoin. So if you think it's digital currency, and you think the euro, the yen, the dollar are currency, then the implication is, well, we're just going to replace the currency of your nation, whether it's the dollar, the euro, or the yen, or the CNY. We're going to replace it with Bitcoin. Now you end up with the entire establishment, every establishment politician, most bankers, most traditional economists pushing back and resisting it. And the politicians will resist it because nobody wants to collapse the dollar. It's a source of American strength that's probably worth trillions of dollars a year to the U.S. So obviously we know why we like that if you're an American politician.
The inflow of new investors into the crypto industry has been a boon for adoption, but has also come at a cost. Now more than ever, the crypto industry is under the watchful eye of regulators concerned about market manipulation, investor protection, and the potential for crypto to facilitate illicit activities. The United States Commodity Futures Trading Commission, CFTC, has warned that more enforcement actions will be taken against the crypto ecosystem in the coming 6 months to 2 years. On May 6, during the 27th Annual Milken Institute Global Conference, CFTC Chair Rostin Behnam said that with the rise in the price of cryptocurrency and the inflow of new, inexperienced retail investors, there will be another cycle filled with crypto-centered scams and frauds. We're going to probably see in the next 6 to 18 months, or 6 to 24 months, another cycle of enforcement actions because of this cycle of asset appreciation and interest by retail investors, he said. With no legal framework presently in place to regulate crypto service providers, the CFTC chair expects watchdogs to crack down on crypto firms. Since 2023, the U.S. Securities and Exchange Commission, SEC, and the CFTC have cracked down heavily on crypto firms, with both agencies recording their largest number of enforcement actions against crypto firms last year. According to research by the litigation consulting firm Cornerstone Research, SEC enforcement actions reached a 10-year high in 2023, with digital assets taking a top priority for the Commission's attention. The SEC tripled the number of administrative proceedings in 2022 and initiated 46 enforcement actions in 2023. The regulator imposed $281 million in fines for settlements. 1/3 of all CFTC crypto enforcement actions in 2023 were against crypto firms. The CFTC took 47 enforcement actions, representing over 1/3 of the total enforcement actions brought by the Commission since 2015. U.S. regulators have multiple cases pending against U.S. crypto firms such as Kraken, Binance, and Coinbase. Regulators continued their enforcement efforts in 2024 when, in April, the U.S. Justice Department arrested the founders of a privacy-focused Samurai wallet on money laundering charges. In May, the SEC issued a Wells notice against Robinhood.
That doesn't work. So you can see how simply by choosing the word digital currency, I will get a negative pushback reaction. Now, if I roll the word to digital gold, well, a lot of times you go to 1,000 rich families and you say, hey, do you like Bitcoin? It's digital gold. And they say, oh, well, that's interesting. I don't own any gold. Okay, name me one billionaire that ever made $1 billion investing in gold. There isn't any. I can't name a single billionaire that will attest to actually owning $1 billion of gold. I can't name a single family out of 10,000 wealthy families that would ever say, well, we made billions of dollars and we bought $1 billion of gold. Okay? So, well, gold's defective. I could tell you why in 2 hours, but what does it matter? The point is we fixed it with Bitcoin. Everybody can say, okay, well, so I suppose you fixed something I didn't like. It's a crappy commodity. And so good for you, but I don't own any. Okay, so that takes you a different path. Now, let's say we change it to digital property. Okay, well, you want to buy $1 billion of Bitcoin. Oh, it's digital gold. No, I'm not going to. They're going to 6102 me. I heard the government seizes gold when it gets to be too much. You think it's gold and you're afraid that the government will seize it because it backs the currency, because that's your historic mindset. If I say to a wealthy person, you want to buy $1 billion of property? Where? Miami Beach? Yeah, sure. How about New York? Yeah, sure. How about London? I guess so. How about $1 billion of digital property in the greatest city in cyberspace? Seems okay. If you went to Donald Trump and you said, hey, I'm going to invest $1 billion in digital property instead of physical property in LA, he'd probably say, yeah, that's fine. You know? So if you actually call it, and how many people say, oh, I'm a rich person, I bought $1 billion building in Miami Beach, but I'm worried the government's going to 6102 it. Nobody ever said the government is going to 6102 my $1 billion building, right? I mean, so you have the skeptics saying, oh, it's too good to be true, the government will ban it, but no one ever said the government will ban a building. And so if you think it's property, it just becomes a very straightforward proposition. If you think it's gold, I call it the good, the bad, and the ugly narrative, Guy. The good narrative or model is Bitcoin is digital property. The bad model is Bitcoin is digital gold. The ugly model is Bitcoin is digital currency. And it all comes down to the word, and you won't get past the word before someone comes right back over the top and tells you what they think.
Bitcoin returned to $60,000 as overhead liquidity thickened past $100 million. Summarizing the current landscape, meanwhile, popular trader and analyst Rekt Capital saw little signs of upheaval. Bitcoin is still simply holding the range low as support, following the downside wick from last week, he told ex-followers. An accompanying chart provided context for BTC price moves in light of April's block subsidy halving, with Rekt Capital previously suggesting that this year's event did not fundamentally differ from previous halvings. The lack of a legislative framework and enforcement jurisdiction for different agencies has created more complexities for crypto firms and law enforcement agencies alike. Keith Blackman, a partner in the New York City office of the Bracewell law firm, told Cointelegraph that in the past, the CFTC chair has often expressed concern about the lack of a comprehensive regulatory framework governing cryptocurrencies in the U.S., starkly contrasting it SEC Chair Gensler's eagerness to proceed with enforcement actions without the need for crypto-specific regulations. According to Blackman, Benham's comments suggest that the CFTC is gradually aligning its perspective with the SEC. He added that new crypto companies would be deterred from entering the market with the added threat of CFTC enforcement, without clear-cut regulations. Existing companies, meanwhile, will need to invest more resources in legal and compliance counsel, increasing costs and potentially stifling innovation. Kraken has already shut down its staking as a service platform in the U.S., while the CFTC has charged the operators of Kraken with running an illegal digital asset derivatives exchange. Despite the dramatic uptick in regulator actions against crypto firms, Wall Street is warming up to digital assets. The launch of spot Bitcoin exchange-traded funds and investment from traditional financial institutions highlights the growing interest of the traditional financial sector in the crypto market. Some market observers have also noted that crypto holders are growing as a political force in the U.S., making the prospect of more friendly regulation seem not so impossible. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.